Welcome back to another edition of Tech Tune Up. I'm your host, Paul Meeks, as always, brought to you by my friends at Benzinga. Today happens to be September 30, 2025. Check out my Johnny Cash Man in Black outfit today, though I am bringing some cred with my Benzinga hat. When I did a show at the Detroit headquarters during the summer, they gave me some swag. So as we always do, I'm going to not just retell the tech news, I'm going to highlight the key tech news and tell you what to do with it. I will talk about some moves that I had made on my buy list. And then, as always, finish up with some tech trends because they're impactful. And if we have time at the end, which we typically do, get a couple of your questions. So start thinking about those. Reach out to us right now. So first of all, let me start on the stock side of the house with Nvidia. Nvidia, as you know, now trading at an all-time high, $186 a share. I think a couple of interesting things are happening here. You might have heard the term in the last couple of weeks called a circular, quote unquote, spending. And this is a situation where Nvidia funds its customers or essentially invests in its customers with a quid pro quo that they are going to buy Nvidia's chips. So I don't know how this works at the end, but it does raise a bit of a red flag. I remember when I was running all the tech money from Merrill during the inflation and then popping of the internet bubble. There was a company that was a red hot dot that later went bust. It was called Lucent. It was the telecom equipment arm of AT&T. And they called the top of the market when they started financing their own customers. Now, I think Nvidia is a special case. It is not going to be like Lucent. But anyway, I do agree, at least to some extent, with the criticism that's now starting to surface over Nvidia and this circular spending. We'll see what happens. I do think it's interesting that with their circular spending, they are participating in a $1 billion funding round for a company in the UK, actually London-based, called Nscale. And this is, think about it as a core weave in Europe. And there's another company that's very much like that. That is the Dutch Nebius. That stock trades here in the States. And anyway, it's just Nvidia making sure that it's going to have enough capacity as the AI infrastructure building nuclear arms race continues. We'll see what happens. I think the take private $55 billion deal for Electronic Arts is kind of interesting. I think, if I'm not mistaken, that this will be the biggest LBO ever done. So that tells you a little bit about the markets, but I will tell you specifically to EA, it has always had a great franchise in sports. Unfortunately, it has always struggled to diversify beyond that. And if you take a look at this stock over time, it's been a slug in that group and has been on my buy list for a long time, continues to be. My favorite in the group is Take-Two Interactive. And I actually think there's a buying opportunity recently in TTWO. So we'll see what happens with EA. Not a good company, not bullish. We'll see what happens. Can't go without any news on OpenAI. And somebody calculated, it wasn't me, that based on what OpenAI has spent so far on AI infrastructure and what they are reportedly going to spend, they're going to put in $850 billion all in when they're done. And here's a company right now that's losing a lot of dough. And so just to put the capacity in perspective, that would be the equivalent of 17 nuclear power plants. And of course, we're going to have to heavily lever nuclear power to achieve these AI data center dreams over the long haul, not just for Nvidia and OpenAI, but for everybody. And the problem with nuclear power plants, even though they sound like a great solution, they are hard to restart, or if you build them greenfield from scratch, it is going to be a while before they're producing adequate power. So we'll see what happens here. I also thought OpenAI did make a splash, which could be really interesting for them. They started through their app instant checkout for both Etsy and Shopify. If they do become a player in e-commerce, which they seem to be focused on, this could be a nice driver, because with all this money that they're spending, they're going to have to show some fruits of their labor, at least at some point, return on investment. Maybe e-commerce is the splash that they can make. Meta is up next. I think this is interesting as well. In Europe, where they've always been under pretty intense regulatory pressure, they are going to start in the UK for its Facebook and Instagram apps a no ad subscription service. If this is successful, which of course it will be, maybe it is going to be something that proliferates throughout Europe and gives Facebook another revenue kicker. Things are already going pretty well there. Stock's been on my buy list for some time. I continue to have a lot of confidence in it. Next up is CoreWeave. CoreWeave is up another 13% today. But remember, I told you last week and maybe even the weekend before that even though they keep on announcing these huge revenue deals, another one, Meta today, OpenAI a few days before that, I worry that long-term this company is a profitless prosperity situation, quote unquote, where they have gobs and gobs of revenue, but they do not take that revenue to cash flow or to increased earnings. So I've been in this stock ever since it's been private, already got a triple. When that stock gets to 150, I've told you here before, maybe you don't take all your money out of it, but you trim it, because that's what I plan to do. Next, I told you the tale of Take-Two Interactive, and the reason it's on my news blotter today is they did have an announced delay in one of their software games, Borderlands 4 for the Nintendo Switch 2. I think it brings a buying opportunity, because the only reason you own this damn stock is because you are going to see the release May 26, 2026 of Grand Theft Auto 6. And that'll be a monster. And so that's why I've been in this stock already for a year waiting for that. So any kind of short-term bit, good time to buy it. IBM is very interesting. You know, if you want to be a big swinging you-know-what in tech, you have to have partnerships in finance, because Wall Street spends a lot on tech. And you have an interesting deal for quantum computing-based algorithmic trading between IBM and the largest European bank, HSBC. Stay tuned. It could be a real validation, a nice case study for IBM and quantum. Here is an example of a company that might be taken to the woodshed with AI. Here is Accenture. Everybody knows Accenture, one of the world's largest consulting companies. But they also do a lot of software coding and what I call other IT body work. They are seeing such gains from their AI agents that they are going to fire 11,000 people. So think about the sectors, the industries in the United States and abroad that are either benefiting from AI or going to be damaged by AI. This tells you that there's a good opportunity maybe for Accenture to lower its cost structure, but also it's telling you what they do commoditized by AI. I actually think overall net, this is a bad sign. Amazon is up next. It's interesting that in Europe, they are going to close all of their fresh food stores, specifically in the UK. And remember, years ago, that was supposed to be a big initiative. A lot of hopes were pinned on that. But the interesting thing about Amazon, super aggressive organization, really good at execution. Now they have some big fish to fry. Remember, I talked about the Zoox, Z-O-O-X, which is their autonomous vehicle that I think is going to give Tesla and Waymo a run for their money in the robo-taxi market. And of course, Amazon has a lot of opportunities, either with Amazon Web Services hosting infrastructure or even in its own artificial intelligence endeavors. So don't give up on this one. I continue to like Alibaba in China. Stock has been doing very well since I put it on the buy list a while back. And I'm more bullish on the Chinese tech names now. And Alibaba seems to be doing all the right things and has a significant lead over its peers in all things AI. This deal with TikTok between the US government and the Chinese government for the US government to take control of US TikTok, I think is quite bizarre. I've talked about this before. You've read all about it. But here is an announcement in the Oval Office that did not include the Chinese. Don't you need to have two parties agree? I don't think that the Chinese are necessarily going to agree to this at all. I don't think we have a deal. I think this is a bunch of PR bullshit. And so we'll see what happens. And then the other thing that is so shockingly weird is I value this property at about $30 to $40 billion. And Vice President J.D. Vance said, I don't know why, he just chimed in, that they're valuing this venture at $14 billion. So why would you undervalue? You want to know why you would undervalue it? Is you have Oracle and you have a bunch of US-based private equity companies in there. You buy in at an undervalued price, and then maybe they immediately take it public or otherwise exit the investment at a higher price. So this could be a fabricated flip it, just like you buy a cheap house and immediately turn around and flip it. This is very weird from all kinds of different angles. AppLovin, our biggest success story of the year. The stock is flat today, well over $700. Remember, even though I love AppLovin, we've been spot on right on this stock. I'm a little bit worried that it's run too far too fast. Now, I told you that 650 was the handle to begin trimming. I still think maybe you should take some money off the table, though I will tell you that some knucklehead on Wall Street that does not have any information that we don't have on the fundamentals, but is just chasing the price, not to be embarrassed with his price target, has a price target. I believe the highest one on the street is now close to $900. I hope that happens, and I only want you to trim it. I don't want you to sell all of it, but this has already been well over a double for us. And so I will tell you that with the two tactical trades that I've suggested, trimming both AppLovin and CoreWeave, I have more urgency to sell CoreWeave than I do AppLovin. Next up is Intel. You guys know I've been shitting on this one. Now we have Apple potentially involved. Trump is making all of these marquee tech companies, both here and abroad, invest in Intel. And that does not make it right, because Intel has already had cash, or has cash that they could access, but they just don't have the manufacturing chops, and this will not get them there. So the last thing I have here is Anthropic. You guys may know that Anthropic is a privately held company, but they have their own chatbot, their own large language model, and they just released Sonnet 4.5. And this, from the tech reviews that I'm reading, not Wall Street reviews, tech people that matter, seems to be the real deal. And so this is very interesting. And I imagine that Anthropic and Perplexity AI go public before too long. It's inevitable. And they're going to be monster IPOs. I'll tell you when I think they're coming. So let's move on to the next segment. A couple tweaks here. I told you about the AppLovin trim. I also think that Meta, which I had been on my buy list, I'm now backing off because technically it's freaking me out a little bit. Waiting on Cadence Design Systems, Microsoft, Netflix, and Boeing, I want to buy at lower prices. I'm particularly excited about Netflix, a tad lower, and Boeing. Boeing is going to be on the right side of this ultimate agreement between the US and the Chinese on tariffs and trade exports. CoreWeave, I gave you instructions on that one. There's a couple of stocks that I think you should keep an eye on. Shopify has now come on my list. Like it. Palo Alto Networks, like it. I also even like Palantir, maybe at a bit lower price. And of course, red for me means stop on the street, sell it. Here's my opportunity in Intel. So next, let's get to some of the tech trends before we hit your questions. So the Fed, love to talk about the Fed. I know you guys get bored of me talking about that. You'd rather have me talk about semiconductors, but the level of rates, interest rates that is, in the United States, bears directly on the valuation of tech and other aggressive growth companies. But it looks like it's a foregone conclusion, telegraphed by the Fed, expected by market watchers, that there are 2 more Fed meetings in 2025. And at those meetings, each of those meetings, they will lower the benchmark interest rate by 0.25%. Now, it depends on what happens in 2026. I don't expect them to continue to be that aggressive. And we're still getting some mixed data between inflation on one hand, which argues for higher rates, and a weakening U.S. job market arguing for lower rates. I think it's laughable, this latest 100% tariff that Trump is proposing on foreign movies. Do you want to have a movie industry in which everything is shot in the States? You're doing a international story and you can't go and shoot without a big financial penalty in that market? It is odd. It is odd. And first of all, I don't think it's even practical, but interesting to me. This is a nice tell. I don't follow retail stocks, but I do follow what Walmart does with its technology. Why? Because Walmart is America's largest private employer. I think they have 2.1 million full-time employees. Their CEO, McMillan, spoke up the other day, and I'll just paraphrase him, but he said that in their organization, which means in everybody's organization, AI is literally going to change every job, quote unquote. So if you're a young person, maybe it's too late for me, old person, but if you're a young person, think about how you position yourself. Because if that is coming from the king of retail, that is coming for you. I think the prediction markets are very interesting. These prediction markets, and they're sponsored by folks like Robinhood, which has been a good stock for us on our list. It is a way that you can bet without formally betting. So in the prediction markets, you can bet on NFL games, but you are buying contracts and not betting on, at least directly on individual games. It's hard to explain. It's obviously just trying to find a legal loophole, but I will tell you, the prediction markets are kicking ass. Robinhood has only been doing this for weeks, if not maybe a couple of months, but it's already $200 million business for them and probably ridiculously profitable. Bain, which is a consulting firm, right? I assume that they know what they're doing. A lot of smart people with Harvard MBAs probably work there, but they're actually pissing on the AI parade a little bit, right? One of the things that they said I thought was actually kind of interesting. I can't vet this myself. It's, of course, a guesstimate, not an estimate. But we have been spending, as a world, so much on AI infrastructure building that if this does not result in at least 2 trillion with a T revenues by 2030, only 5 years away, then these companies that are doing all the spending may not earn an adequate ROI. And I don't want to say that this would indicate the AI is bust. Of course not. That's over exaggerated. But you're seeing surveys and other kind of predictions that are putting a lot of doubt on the end game here. Hey, you know what? Everybody's going to be buying Nvidia GPUs. At the end of the day, those folks, not Nvidia, they're selling just the picks and shovels. They'll make a shitload of money. Stock will continue to do well. But at some point, these software companies need to generate AI return on investment. And so there were some other surveys you might have seen from MIT and others. MIT says that they surveyed U.S. enterprises, AKA corporations, and 95% of their AI projects just weren't bearing fruit. And then another survey I read that despite all the excitement with the consumer base in the US and abroad with AI, when it comes to AI, such as the chat bots, the consumers are only 3% of the consumers are actually paying for it. So again, where's your ROI? We'll see what happens. So the last thing I will say that makes me a little bit worried is I thought this was a stat that just blew me away. So somebody did the math, I assume, accurately, and said that since ChatGPT was introduced by OpenAI in November 2022, 75% of the return on the S&P 500 has come from these AI companies. And these very same companies have accounted for 90% of America's capital expenditures. And I think the number was 80% or so of their earnings growth. So as we know, tech moves the markets because tech has such a large weight among the 11 S&P 500 economic sectors. But a very concentrated group of AI bellwethers are driving the sector, which in turn is driving the market. That's a little bit worrisome when you have this kind of concentration in the markets. So some stuff just to think about. I'm starting to, we've been heroic with some of these stocks that we bought, but I'm starting to worry a little bit. I'm starting to think, not now, I don't know when, I'll let you know when, that got to start maybe taking some money off the table. With my investment style, I'm typically early in and early out. I don't mind giving up some profits because I don't want them to disappear into the ether. So we have a few minutes. Let's take a look at some of your questions. That's cool. It's a slow news day today. Oh, here we go. Let me read this out loud to you. As a parent of 3 grads, I assume you're talking about high school grads, or you're talking about college grads. How do I prepare for a jobless future for them? Dude, you're bumming me out. I hope I didn't rattle your cage or get you into a depression when I talked about AI taking people's jobs. But what I would tell you is you want to be on top of the next 2 paradigms, AI, and then after that, quantum computing. So if you could end up even being someone that is just an expert with AI prompting, that means asking the right questions to get the most out of AI, you can make rock star money. So it doesn't mean you have to be a quant, right? I ended up being a pretty well-known tech investor. And when I graduated from college in 1985, I double majored in history and political science. I was a liberal arts dude and played football and lacrosse and chased skirt. That's about all I did, and drank. But I will tell you that just make sure that you embrace an industry that is going to be less impacted, and don't run away from the AI tools. Run away from the quantum computing tools, which are coming next. You must embrace them. I'm in my 60s, and I'm trying to figure out ways to do that myself. We all have to recreate ourselves. But you know what? As a dad myself, I got a 32-year-old and 29-year-old. Yeah, I'm a little concerned too. But a good question. Do you have an opinion on Marvell? I think Marvell's a fine company, but I've decided the way I want to play the internal development of GPUs, so these hyperscalers can develop their own chips and not have to be spending highway robbery money for Nvidia GPUs. I like the execution at Broadcom, ticker symbol AVGO, versus Marvell. Because Marvell, before they got into that space, they were essentially a auto and industrials kind of Internet of Things semiconductor company. And that's fine. But the reason you own it is you think they're going to have great gains in this market. And at the end of the day, almost regardless of relative valuation, I still prefer Broadcom in this particular space. All right, guys, thank you very much. I hope to see you next week. I I don't see a lot of important tech milestones between now and then, but you know what? The beauty of following this sector for all these years is stuff will happen. It's a coming if we like it or not. Until then, we'll see you next week.